Paul Nolte joining us, Senior VP and Portfolio Manager at Kingsview Asset Management from the floor of the CME. So, Paul, we've got a day finally where stocks and crude seem to be very much in line.
They are, and what's interesting is stocks are moving not on trade today, and neither is
Hallelujah.
It's a change. It's a big change. So what we've got here for oil is OPEC. OPEC has said, hey, we're going to cut some production, and we're going to try really hard to keep the cheaters in line. So we'll see how that one works for them. But as we've talked about in the past, you look at the U.S. production, and we're still producing a lot. We're still producing more. We're actually, for non-OPEC countries, the largest producer by 2 over the number 2 producer in Norway. So we're still, I think, dictating the price of crude, but I think we're still kind of stuck in a range here between $50 and $60 a barrel. And obviously the equity markets are going on the unemployment report this morning, which really surprised everybody. Basically a 2 to 3 standard deviation move away from what was expected this morning.
So when you've got the move in crude coming ahead of the expectations to the bullish side, obviously the employment report was, coming ahead of their expectations too. The range, if it's broken, Paul, I imagine is a big deal, right? The longer we're in a range, the bigger deal to break.
It's true, and and certainly a 10-point range in crude oil is a huge range. But we got to go back and take a look and say, what's going to do that? What's going to make things get much above 60 and stick? And or for the same, by the same token, what's going to go below 40 or below 50 and stick? And I think the opportunity probably is more below 40 than above 50, or below 50 or above 60. The reason for it is U.S. production, and we've said it for a long time. They are really trying to be the producer around the world, and they continue to produce more and more energy. So at the margin, at least, we're looking at big builds. We can see energy prices lower. I can't make a real strong argument for energy sustainably above $60 a barrel at this point.
Does that mean that even though the last month we've kind of steadily been grinding higher, you're not ready to, buy an exposure to the upside? What if it does break 60? Does that change for you?
It does change a little bit for me, but I think what you're going to see then is you're going to see a lot more production coming online. We see it, especially when you get above $80, we see a ton of production coming online. So higher prices in the energy sector tends to produce much higher production levels as everybody tries to capture those prices. But they all move in at the same time, which then forces prices lower.
All right. Do you want to bet against it? Or is there a way to combine kind of this stability in crude with the possible reflation trade by buying stocks? Do you want to own energy companies in your fund?
We own a little bit, but we're definitely way underweighted energy at this point. And energy is such a small part of the S&P 500 right now. In fact, Apple is the entire energy sector. So, I mean, if you wanted to buy energy, you could buy Apple. Apple could buy the entire energy complex today. So it's not a big component of the S&P 500. Energy could double here, and it's not going to have a huge impact on the S&P price performance. So again, it's not one that we really focus on too terribly much. We have a little bit. There's some good companies that do pay dividends, but we're not seeing the growth in revenue. We're not seeing the growth in earnings. We're not seeing margin expansion, et cetera. And I don't want to say it's a dead sector, but it's not one that certainly generates a lot of excitement.
All right, I got one for you, Paul. I'm going to get you on this one, okay? Copper. How do you not love the chart for copper now the last 5 months? All this talk about global stability. You want to buy Dr. Copper?
Copper is an interesting one. If we can get above 272, I'd get a little excited here. And copper's been moving over the last couple days, or last couple weeks, really, more on trade. We sold off early in December as, we can wait until after the next election to do a trade deal with China. And then all of a sudden, we're really very close to a trade deal. And you saw copper move almost in lockstep with those comments. So I think copper, I think, is going to be really more a determinant on global growth. We're generally seeing growth slow down a little bit. Even the economic data out of the United States, outside of the employment report, still shows slowing growth. So copper is interesting, but you got to get it much above 272 before you get excited about it.
Okay. Paul, before we let you go here, is there a way to get exposure to better than expected economic situation without taking some of these bolder, growth-oriented cyclical bets? Because it seems like you're not sold on that strategy yet.
Not yet. You know, one of the areas that really has been underperforming and is just now starting to outperform is healthcare. And so if you're taking a look at an area, and it's been led by the biotechs, so you get kind of a techie feel, if you want, by going with some of the biotech companies. But healthcare as a whole has underperformed dramatically this year. It started to pick up a little bit of steam over the last few weeks. It has political risk, but that being said, you're finding more values in the healthcare area than you are in a lot of other parts of the S&P 500 today.
Yeah.